You are now listening to the Supply Chain Secrets Podcast with Bryan Most and Don Davis.
All right, so Don, let's just do a quick recap to set the scene, right? I mean, this started back with the global pandemic, where there was still capacity in the marketplace, but obviously freight was limited. Then the freight came back and capacity was limited because carriers had to right-size their network, offerings. And then there's just been this resilient economy that has just sustained all the way through this thing, and I think really surprised a lot of people. And that sustained, growth has really challenged all modes of transportation. I think since, if you go back to the second half of last year, 2020, and has really led us to what many are calling just an unprecedented time in ocean shipping, where you and I were having a discussion this morning that just said, hey, depending upon the port pairs and the time when you want to ship a container, you could be willing to pay upwards of $15,000, and that might not even get you a spot on the ship, which in our lifetimes we've obviously never seen. And there have been all kinds of predictions about how long this is going to last. It started back with, hey, is it going to resolve after Chinese New Year? Oh, well, it wasn't Chinese New Year, but it'll be prior to the peak, what have you. And I'm not sure anybody really knows, but it's going to be a fun topic to discuss. And I'd love to just get your initial thoughts on, where we're at and where the heck we might be going.
Yeah, I think it's a question that's on so many people's minds of like, when is this going to end or will it end? And I think what we've seen is that there's just this massive backlog that's happened. And this is due to the things you talked about. It's due to this growth in PPE, this personal protection equipment that just boomed over the past year. I guess it's been up 25% year on year. And it's starting to slow, but still, just with the people ordering goods and being at home and sitting around and saying, hey, I need a new bookcase or these kinds of things, have really just caused this increase in goods purchases, which is why you see this surge in volumes. So I don't think there is any good news for anybody in container shipping, unfortunately. I think Lars Jensen did a great job. Who's a friend of the pod. You can check out one of our episode with him when we talk about the Suez Canal blockage. But he wrote an article saying there's no easy road ahead for container shipping. And he's got some great stats in there saying that 78% of ships into the West Coast are delayed. He quotes Flexport as saying that the average transit time has increased from Shanghai to Chicago from 35 days to 73 days. So I think there's two things that are happening. Rates have never been higher and the service has never been worse. And that is certainly frustrating for a lot of people. But the issues are really that there's, again, this huge backlog sitting in Asia. And there are these things that keep happening, which are causing things to get worse. You look at what just happened in Yantian. They had an outbreak there. The terminal starts working slowly. And this just causes another delay. So it doesn't seem to be getting any better. And we're looking at the face of this typical peak season. And you put a peak season on top of what's already happening. And I think that equals more of a backlog and that things aren't going to move because, as you mentioned, the rates are getting incredibly high. I think the highest rate level I heard quoted was $22,000, which is just completely unbelievable to most people. But even at $22,000, does that mean you have a guaranteed slot on the ship? That comes into question. So it's been a challenging environment. And I certainly don't envy those that are trying to ship cargo because I think it's tough. And the carriers are trying to do what they can to get things back on track. No one at a carrier wants this to continue. But as I mentioned, Malaysia could go on a lockdown. And if that happens, then you have another delay. So there's just these things which continue to happen, which are causing these service disruptions and making it difficult for carriers.
Well, and I think the point too is I've seen a number of press releases from carriers saying that they've continued to try and invest in the business, right? So I think any ship that can be chartered has been chartered, even at elevated rates for extended periods of time. I think the idea of investing in equipment where they can invest in equipment and put that to use So it's not like carriers aren't trying, right? I mean, they're still investing a lot of money. I mean, a lot is said about how much money they're making, and without a doubt, they're certainly profiting right now. Which again, they're a business that is for profit. But at the same time, it looks like to me they're investing where they can to try and resolve any of these service challenges or capacity challenges. But even if they have put in ship orders, those they're not going to see that capacity for a couple of years, right?
Yeah, that's the challenge that if it's going to take a few years for a ship to show up. So it feels like it's good news that the order book is increasing, but it's just bad news that it's not going to be a short term solution. And I think the reality is there aren't really good short term solutions. That we've heard of some different ideas on what people are trying to do to find capacity, but again, it's this massive backlog, and there's reports from a variety of companies that have shipments which aren't covered in their MQC that they're trying to find a home for. But again, it it's a situation that continues to get worse because there's these disruptions which are not improving things, and then causing issues with empty supply. And as you run into these empty supply issues, then of course it makes it more challenging to use your capacity. You see carriers blanking ships to get back on schedule because of the delays on the West Coast. So it's a very tough environment, and one that, again, I think it's going to remain that way at least until the end of the year.
Well, and you talk about some of the disruptions, and then when people try and then say execute an alternative solution to try and avoid the disruption, then you create a disruption potentially somewhere else, right? I mean, one of the things that we have known and we have talked about is what's been happening on the West Coast. Obviously in Southern Cal, but then obviously now Oakland and other ports and terminals are congested as well as you move north along the West Coast. And then you see this big, surge to the East Coast, and now you've created this situation on the East Coast where there has been certainly, port congestion, not certainly not what's been on the West Coast, but then just access to pure capacity, right, on the ships. They're so oversold, and that's where I think you're seeing a lot of these really high rates, just because everybody trying to avoid, say, the West Coast, and now creating another situation or a challenge on the East Coast.
Yeah, it's sort of like this seesaw kind of effect, right? You a problem happens here, and then it pushes things up on the other side. And I listen, I think it's really tough for the carriers too, because you hear these stories of these really high rate levels, and I don't think the carriers are the ones who are conjuring up these rate levels exactly. I think that there's people who are saying, like, "What's the current rate? It's $10,000. Okay, I'll pay 12," and then people start paying 12, and then it's like, "Okay, what's the highest rate you have? Okay, I'm willing to pay more." So it's just the market environment that's causing these prices to go up, and it's amazing to me that people can still afford to ship material at some of these rate levels, but that's what's happening. And now that gets us into this, again, numbers I've never thought were possible. I mean, if somebody had told me 2 years ago that there'd be a $20,000 rate in the market, I would have said you're an absolute liar, because it's just so unprecedented. But I think it's just, again, these effects of what's happening that's causing these rates to increase. And again, it's tough for a carrier, because if I want to give space to you, and you're coming to me and saying I can give you 100 TEUs a week at $20,000 a box, I have to take it away from somebody else because there isn't this available capacity, which isn't really the situation the carrier wants to be in. And I think there's several carriers who are like, "Look, I'd love to do that, but it just means I'm going to take it away from somebody else, and that's going to cause another problem downstream for me."
Yeah. Well, and so a lot of the challenges manifesting on the shipper side really come down to them serving customers, right? A lot of what I'm hearing is with the inflation in costs, not just ocean, but across the entire supply chain. It's just almost impossible for these big shippers to offset these costs. Obviously, there are ways to offset some increases so you don't have to pass that through to your customer. But at this point, most people I'm talking to are saying it's almost impossible not to pass these kinds of costs through. And of course, it depends on what kind of commodities you're shipping. Big pieces of furniture obviously get passed through on sofas. and smaller goods or low value, high value. It depends on how that cost equation works. But at the end of the day, you're starting to see that even in some of these financial releases, that even though companies are beating their sales and profit expectations, they are hinting and giving a forward look at this inflation that's coming, that there's no way for them to offset. So it's either going to impact their profitability or it's going to be passed through in terms of higher prices to consumers. And those are tough things to deal with as well. But to your point, I think that there is some perspective that it's here to stay for a while. Otherwise, again, I don't think you'd have to, be that prescriptive in some of these forward-looking statements. So without a doubt, it's being felt across the board.
Yeah, and I think there's two questions that are on most people's mind that I talk to. One is, how long is this going to go on? And the other is, what's a normal rate look like after this? Like when things return to normal, what would be a price? Because I might be used to rate levels somewhere below $2,000 to the West Coast, and do we ever see those again? But I want to take that first point first of how long will this go on? And I think you're really looking at Chinese New Year next year, that there's any hope that things could slow down, because what people tell me today and what I hear is that even if things were to slow down today and things are opening up, people start to travel, they stop purchasing goods, there's such a backlog that backlog is going to take the remainder of the year to clear out. So given that's the environment, I don't think there's any reason to think that in the near term, certainly not in the near term, but is it going to be within this contract cycle that things clear up? I think at this point it's a maybe, but it's not a definitely. It doesn't seem to be certain, because again, I don't believe that there's any additional capacity to be had. And I know the carriers have tried, but it's very difficult to find any available capacity anywhere at this point.
Well, and when you just look at retail inventories to sales ratios, et cetera, those are data points that support what you're saying, right? About this backlog. There is still a huge restocking effort that is to be had if we're going to get inventories back to where they were, kind of pre-pandemic. And, I know everybody has a different strategy on how they're going to manage inventories, but if you just take that for what it is, there's certainly a lot of room to grow when it comes to if people continue with their traditional sourcing efforts. It was interesting to see some companies now announce, manufacturing facilities here in the U.S. Right now, again, I know it takes a whole lot of companies to make that decision to move manufacturing here closer to their consumer base. But you're starting to see some of those things. And yeah, I wouldn't disagree with you in terms of how long this takes. But, whether it's Chinese New Year or not, one of the things that also, came out from the JOC, Peter Turchwell wrote an article about just this looming, ILWU, agreement expiration and negotiation that's going to happen, and what that means or doesn't mean. And no one knows, right? We've kind of, eluded, some of those disruptions in the past, and sometimes it's been really, really painful. But, back to our discussion about the East Coast, that says, well, hey, look, maybe things resolve themselves and start to settle into whatever the new normal is, say on the West Coast by Chinese New Year of next year. But if you already have shippers that have lived through disruption for the past 2 years and are going to be ultra conservative in terms of avoiding future disruption, they may start continuing to continue to shift volume to the East Coast, which makes now the East Coast, continued challenge, right, and elevated rate levels. And so there's all these things like that you could say, hey, this thing's never going to end. At some point, it will normalize, but I would even take it one step further and say it could be after next summer, right? And after this ILW, whatever gets negotiated and landed, until people settle back into their normal kind of trade patterns, before this thing really kind of gets back to whatever normal is going to look like.
Yeah, and it may be a situation where this is normal, right? Because it's been going on for quite some time, and you see these sort of service disruptions. Because again, the assumption here is that things are flowing as they should, But as I mentioned earlier, you see what happened in Yantian. You hear Malaysia shutting down. You see these things happening, and it's any disruption is just causing a greater backlog. So I think we've shared quite a bit of depressing information, I think, for anyone who's trying to ship. But I think there's some question of like, what do I do, and how can I manage things in this environment? And I do think there is some thought around being creative with routings, as an example, because you just may not be able to follow your traditional routing if you went from, let's say, Shanghai, LA to Chicago. That just may not be viable. But it's about looking at where there might be capacity, and I think it's a matter of it's time to be creative, because again, if the plan is just to wait until things improve, I don't think you can do that. But are you hearing anything about that on your side, Brian?
Yeah, I think people at this point are taking available capacity wherever they can get it, right? It has gotten to that point where, even if it is not a typical import gateway for that customer, that they are accepting the capacity just to get it here, to North America, and then figuring out how to get it to ultimately where it needs to go. And that, brings on a whole new set of challenges around what do I do domestically to create a network to now be able to distribute to probably a non-primary network at that point, because it's coming in somewhere that I'm not used to. But at least the product's here, you can put your hands on it and you can do something with it, right? And so I think that's again speaks to the desperation. But this idea of accepting non-traditional routings or extended transits or what have you is absolutely a strategy that certainly even the biggest shippers have accepted at this point. And again, prioritizing freight. So in other words, you talk about this backlog, but as a shipper, there's got to be some way internally where you're continuing to stay in touch with your actual retail operations, with your merchants, with sales patterns around what is the highest priority goods, and be able to communicate that, because there could be a very late last minute communication from a carrier, say, about an extra loader opportunity. I know they're far and few between, but you and I both know that some are happening. And so when you get that call that says, hey, there's going to be a ship and it's going to be in Shanghai 2 weeks from now, and you get 100 TEUs on it if you want it, well, you better make the most of that 100 TEUs, right? And know what you're going to prioritize to be able to best put your company in a position to take advantage of that capacity.
Yeah, I think that's good advice, is to really prioritize, because I think you're absolutely right. There just aren't that many opportunities to prioritize cargo. And I think early on this year, it felt like, I could just buy my way onto the ship, and that's why I see these rates getting so high. But I think we're just at a point where, it's like, look, for carriers to be profitable in the TP bound trade, the rate has to be somewhere around $2,000. And when you're talking about $20,000, $24,000, et cetera, it's just so far above that profit line that, carriers are at the end of the day have to provide a service. So being able to buy your way on the ship is just, that's diminishing, because the rates are just getting so out of control high. And I don't think that's something that's going to fit for everybody. But I think it makes a ton of sense to really think through, what are the most important things, and really jumping on those opportunities when they occur.
So you talk about where the spot rates are, where you think rates need to be for a carrier to be profitable, which I'm sure changes based on fuel prices and all that other stuff. But if you just take the round number of $2,000, where do you think this thing actually settles, right? So we've talked about budgets being reset, this new normal. Not sure if rates will ever get back down to that point. Again, I know it's hard to predict this stuff, but I mean, like, what do you think that the new normal rate could be to say the West Coast?
Yeah, that's such a great question, and I know it's on a lot of people's minds right now. But let's just kind of go back to how things were before we talk about how things will be, because I think for a long time in the industry there were so many more carriers in the industry, and there just seemed to be this conflicting agendas that some carriers were interested to gain market share, some were interested in certain trade lanes, et cetera. And you just had this behavior where the rate wasn't as important, and it seemed like there was no bottom to some of the rates. It felt like sometime, and so when people start to talk about like when do you think rates are going to get back to like normal, like that $2,000 level, I'm going to say never, because I think that there's so few carriers now in the industry that you don't see the same kind of behavior you saw when you had, three Japanese carriers before you saw, Hapag-Lloyd, ingest carriers, Maersk, etc. I mean, the industry is consolidated, and I don't think you see so many different kinds of agendas within the carriers that you're just dealing with a smaller base. And I think once you kind of peel back the curtain and you see that, wait a minute, a shipper's willing to pay $5,000 for a box, $8,000 for a box, $10,000 for a box. It's a little hard to go back to saying, we're going to try and squeeze, the juice out of the lemon peel here to try and get something out of an $800 rate. I don't think you go back to that. And I think that when things do change and carriers are in a position to attract freight again, are they going to need to go down to these triple digit rate levels? I don't think that's ever going to happen again. Do I think it's ever going to happen where you're below $2,000 again? I don't think so either. I think that the new normal is probably going to be somewhere like 4,000 to 5,000 to the West Coast. And I think that's good for the carriers. And I think that's a ton of short-term pain, but I think this industry has had such razor thin margins that this doesn't have to be all bad news. I think there's a way to innovate and invest in the industry. And that's what I hope the carriers will do, which my guess is that they will. And I've talked about this before, that I think there's certain environmental challenges the carriers have to deal with. But I would be really surprised if you see the rates go down, because my guess would be that in the next contract cycle, even though rates took an increase this year, that next year it's also going to take an increase, and those increases are going to be significant.
Well, it'll be really interesting to see, because you still, I think, have a contingent out there that thinks that, hey, the carriers will go back to their old ways at some point. These ships are going to hit and they're going to get competitive again, even though these structural changes have hit, and they'll become opportunistic and chase market share. And I'm with you. I'm not sure we get back to those days. It's certainly going to be interesting to see how it plays out and how things evolve. But I like you. I don't see any significant new capacity. I mean, sure, you hear somebody's going out and chartering one ship here or one ship there, but the idea of, a new global carrier entering the trade to truly disrupt and drive that, that market share mentality, I'm not sure that happens either. I don't know where it eventually lands, but it certainly is going to be interesting to see. I think that, when we got back to things that you could do to try and manage through this, right? I mean, you had some shippers that thought, I'm going to sign contracts early. I'm going to lock up space and I'm going to lock up rates, and that's going to be beneficial, to me. We've heard that in some of those cases, if there's a good relationship and again, you're a customer of choice and you're doing all the things that the carrier needs, that there's a chance you might be getting what was allocated to you. You might not be getting everything you want in terms of overflow or what have you. And there are some that waited and said, hey, things are going to, things can't continue this way, so I'm going to wait this thing out. I think, unfortunately, they are put in a very difficult position now, because they certainly didn't get what they wanted if they waited until, late March or April to try and negotiate. And so now you have this position where people are, they have this overflow freight and they're trying to figure out what to do. We've heard that there is this idea of doing a supplemental bid or a gap bid. It just kind of depends on what you want to call it. Obviously, you can go kind of the NVO route to try and get access. There are certainly premium offerings. When you hear of the different things that shippers are doing, Don, like what's working, what should people focus on? How are carriers reacting to some of these offerings from shippers?
Yeah, thanks. And before I answer that question, I want to go back to one of the things you said earlier was this whole idea around carriers going back to their old ways. And I think the difference now between those old ways is I kind of feel like it's the Hunger Games, like when you start off in the Hunger Games, there's a lot of districts out there, there's a lot of people, but eventually some of those people kind of die off. And you start to look around and it's like, hey, there's only a few of us left. And I think with only a few left, that those other carriers have died off for whatever reason. And again, a lot of that was driven by these unhealthy balance sheets, honestly. So now that the carriers are much stronger and they have much fewer, I don't think I think those old ways are gone, and that we're in a new period of carrier mentality and a carrier way of thinking. And this has been such a sustained period. I mean, we're beyond a year where we've been seeing this rate go up and up and up. I think we're in brand new territory, and people have to think differently, because if you're thinking of things in the old way, that's like me thinking about taking a horse to work tomorrow. That I there is no horse for me to ride to work because it's gone. So this is really a change in the industry, and people have to embrace that. Now, to answer your question about what people are doing that's working, um, again, it's tough, because if you don't have strong relationships with the carriers, then it's going to be difficult to try and do that in this environment. But I do think that starting to think longer term and think more strategically about what you're trying to do in your supply chain, and working with a carrier to say, look, I'm willing to really commit long term, and do what you can to show that you're committed, because there's a lot of talk. And it's something the carriers are concerned about, because at some point things will change for sure. But it's a question of, if I'm committing today, and let's say I'm thinking more longer term and I'm willing to commit to a higher rate, well, how does a carrier have an assurance that you're really going to deliver, because there's a concern that you may walk away at some point. So I think really thinking through, some of those things, like, do you believe that the rates are really truly going to change and they're going to go up? Then it probably makes sense to lock in early, because then you could say, well, I'm willing to give you the increase now. So my rate might be X, and I'm willing to increase it to Y, but I'm willing to give you that increase now for a longer period. I mean, I think those kinds of things are signaling partnership and commitment to carriers. And there's some openness around that.
I think that I think whatever you do, and we've talked about this before, is you've got to be thoughtful about this diversified approach, right? I mean, no one knows what's going to happen. We've got indicators leading, lagging, and we can all guess what might or might not happen. But I think taking a portion of your business and hedging, right, against the future, if you can get a carrier to do that over potentially multiple years, might make sense. I certainly wouldn't advise anybody to do it with 100% of their business, but yeah, for a portion of your business, to limit risk and to ensure that you have capacity and some stability from a rate perspective, for a broader time horizon. I think that makes sense. One of the other things that I've heard is that these carriers obviously have sister companies, and there are ways to bundle services. And there has been some openness to carriers to have a broader discussion, right? So this whole thing of saying, it's more than just ocean freight, right? The challenges that shippers are having today is more than just the container and the ship. It's getting through the port, and getting stuff drayed, and getting it warehoused or deconsolidated, or intermodal, or what have you. There's a whole lot of other things that people have to do, and a lot of these carriers have invested in other types of offerings, and probably, no doubt, with some of the profits they've made, may continue to invest in some of those other ways to support their customers beyond just the ship. Do you think that that's something that carriers are open to, or that shippers should consider, is bundling services?
Oh yeah, absolutely. I think that makes things a lot more appealing for a carrier and makes it more palatable, because believe it or not, I mean, they still have salespeople, and they're out there trying to capture certain things, whether it's exports in a certain trade lane or certain types of cross-selling value-added stuff. So there are things there, and I think it's a matter of really understanding what what the carrier salespeople are trying to sell, because again, they have priorities, but trying to bundle those things together, I think makes a ton of sense and makes it easier for carriers to maybe make some changes. I, I don't want to sound like there's a ton of opportunities to change, because I think that carriers are seeing now where certain corridors they're overcommitted, and it's difficult to deliver service there. But I think there are opportunities out there, and it's a matter of trying to understand those priorities with the carrier. And I do think bundling is an effective strategy with a carrier.
Yeah. Well, and it gets back to just this idea that we've talked about for a long time is just being this customer of choice, being easy to work with, easy to deal with. I think that while there's this immediacy of getting caught up in $20,000 rate quotes, there's also this idea too that I think carriers realize at some point, right, that this will normalize to whatever that is, and this is a great opportunity for them to essentially solidify their customer base and truly align with people that are easy to do business with, are working on the right things around collaborating and being transparent and sharing information. I think there is still an approach there that says there are still carriers that want to align with shippers like that. And there is a longer term approach to that in securing, again, not just a relationship, but also capacity and service levels.
Yeah, you took the words right out of my mouth. I was thinking exactly what you're saying. Long term is the approach, because again, nobody knows how long this is going to last. It's probably going to be a while, but positioning yourself long term and partnering with the carrier for the long term is, to me, the way to go, because what keeps carriers up at night now is really, when is this going to change? I mean, things are great now. It's not sustainable that they're going to be $20,000 rates forever. But when does it change, and what does it look like? Well, part of that concern can be eased by people committing for a longer term and showing carriers that, like, hey, I'm going to be here, through thick and thin, and it's not going to just be like I'm here today, gone tomorrow. And I think that's a very helpful approach. And as you say, you think about long-term bundling, I think is an attractive thing for carriers.
Well, and here's the thing, right? I mean, we try, obviously, we work for the New York Shipping Exchange, and, we offer, committed, performance based contracts. And we try not to use this format as a way to sell that, right? We're really here to just try and educate people and talk about, all kinds of solutions. But I think I think we have to talk about the fact that there was a group of kind of early movers in these committed types of agreements. There was all kinds of talk at TPM this year about two-way committed deals, and the carriers had come out and were very clear about their future intentions, about how they see committed deals working in their future and how they were going to move to it, and how it was an initiative of theirs this year to align with customers that wanted those kind of agreements. In other words, where yes, as a carrier, I have a responsibility to you, but now you as a shipper, you have a responsibility to me, no matter what the market is. And we certainly have seen a lot of growth and early adoption. But what's your thought when you think about where committed agreements, ultimately kind of play also in this long term approach with carriers?
I mean, I think the committed way is the best way. And the reason for that is because, I think in my career, I've experienced things where it's like, hey, I need help, in this trade, and you need help in that trade, and you talk about it, and then you both go off and do it. And then, somebody else has to monitor that performance. Me in my roles wasn't necessarily watching this particular customer perform. And having a committed contract where someone's monitoring the performance and ensuring that both parties are delivering what is agreed, to me, is super powerful, right? Because I think it's difficult for a carrier to kind of drill down to each individual customer, each individual performance, and monitor that. Having somebody do that and ensure they're going to perform as contracted is helpful, and it can help strengthen those agreements. And I could say that so far, I haven't heard anybody say I regret doing a NYSHEX contract. Nobody said that from a shipper or from a carrier, that The people that are using NYSHEX contracts have said to me, this is a good thing. This is great. I wish I did more. I'm going to try and do more. So you hear that. So I think that from a customer experience perspective for both the shipper and carrier, it's been great. And I think it's really powerful to demonstrate like, hey, I'm willing to commit and I'm going to have these guys manage it. I think that is an effective strategy that can work. But my experience has been so far very, very positive.
Yeah, no, same here. Most of what I've seen has been really positive. We certainly have, many more opportunities, right, on our exchange today, and trying to match that with, capacity and carrier availability has certainly become more challenging, without a doubt, just based on the market conditions. But it still shows that there is this want and need for this performance guarantee. And it still shows that there are obviously matches that are happening with carriers based on their networks. And so, I guess for me, if we start to just wrap this up as a shipper, it's still as uncertain as it's ever been, but there are certainly clear indicators that say that this is probably going to be here for the balance of this year and at least for the first half of next year in some form, right? And so I think about if I do have guarantees, first and foremost, I am making sure that I'm leveraging those guarantees to my advantage, right? Whether they're NYSHEX committed contracts, whether they are committed, carrier direct deals. Again, we talked about prioritization. My most important freight is going to be geared towards those guaranteed types of arrangements. And then it's all about relationship and customer of choice. We've talked about how those things are still important. They're certainly not the decision drivers that they have been in the past, but where you do have relationships and where you can leverage this longer term approach, that's certainly where I'm going after my guarantees. And then the different strategies that we talked about earlier, potentially looking at a portion of your business in a multi-year, contract, potentially taking advantage of an extra loader or investing in price and a premium service where I know I'm going to get some kind of a return, on that investment. And then it just, like we said, comes down to prioritizing goals and objectives. What is the most important things for me to work on right now, and what can I deliver for my company where we're going to get the biggest return on that investment? And then it's about communication, right? You need to be sure you are communicating with your entire organization. Here's what's happening. Here's what we're doing to help solve. Here's what we're doing to prioritize. And here's what we're going to do to hopefully, get the most important goods to our customers and limit whatever cost, inflation there is, so we can minimize either passing that through or it eating into our profits.
Yeah, I think that's a great summary. And Bryan, I've said it a million times, you're a smart guy, man. I love the recap, and those are a lot of great thoughts. So I think our listeners are fortunate to have your wisdom shared, because I think that in these turbulent times, it's great advice.
Very good. Well, Don, look, I'm sure that we'll be on again talking about this very subject. But look, it's always great to get your insights as to know what carriers are thinking, what they're planning, and again, just things that shippers can do, right, to strengthen their relationships. So certainly appreciate your feedback as well.
Yeah, it's been great. I love sharing the perspectives. It's always fun to chat. So thanks for another great episode. And don't forget to hit your like button wherever you download our podcast, Spotify, Apple, etc. And we'll see you again soon.
Thanks for listening to the Supply Chain Secrets Podcast. Make sure to subscribe to the podcast on your favorite podcast network.